We have a very volatile situation. We got a lot of Fed speakers today, but Williams obviously holds a lot of weight. We're listening to Collins right now speaking also, who tends to slide more dovishly as well. The problem is, again, there's this debate over the labor market, right? We've had kind of mixed data. We had high NFP print, which again was delayed and lagged, but still showed that there was some momentum there from that front. But when the household survey itself was a little weaker under the hood. Markets now, as we know, with the AI trade encapsulating everything everyone's talking about, is much more in a delicate position. And we need the Fed to sort of indicate more clearly where they are as far as giving further easing. And finally, just as a point, because we're going into month end next week, front-end liquidity is still pretty strained. We have a lack of cash, to say it. They've overdrained in some ways, according to some sell-side research. And we're waiting to hear how they're going to address it after QT ends in December 1st.
What did you make of the trading activity yesterday, Michael? We opened up and it's such a strong first couple, 3 hours, and then it just rolled over hard there. What did you take away from that?
Yeah, there's 2 hours there from about 10:30 to 12:30 where I was looking for a headline or a catalyst. We were reaching out, obviously, across our contacts, on trading desks and PMs. And overall, we didn't get anything clear. We had some comments there that were from the Fed saying they were more concerned about credit markets. That's clearly been an overhang. We've seen Oracle, CoreWeave, some of these AI names that have a higher profile there, and credit concerns leaking into other parts of credit, including the business development corps. We had Blue Owl a day earlier being a big topic, so that was important. But overall, I think people reassessed the NVIDIA story. They saw that accounts receivables had risen more than sales, and also that they had inventories going, indicating that they were having trouble moving some of the older chips. All of this now weighed on the tape. The tape kind of fell on its own and became self-fulfilling. We broke some key levels. You saw some of the systematic selling pick up, and then dealers were chasing down as they hedged their own positioning lower.
So then what do you think the next catalyst for this market is going to be? Is it going to be the Fed meeting between now and the end of the year?
Yeah, we're sort of in a pocket now where we're not going to get any official data, which is interesting. A lot of that comes after the Fed meeting, unfortunately, right, which gives that uncertainty overhang more breadth. Month end is next week. Again, my worry is this liquidity concern. We're going to see the repo market tighten up as people try and get their balance sheets in order. That's something to watch clearly. But again, we'll see. We got a lot of Fed speakers. Everyone's looking at the Fed. The Fed speakers are always the guys that are now going to move it because there's a lack of other catalysts, and we're through earnings basically.
What's the AI narrative these days? I mean, it's been such a bullish, I guess, tailwind for this market, but now it seems like it's a little bit of a crosswind here. It's like, I'm not sure if AI is going to be the next leg up.
There's a couple of things and a couple of ways I've been thinking about it. One, there's just a duration mismatch. We have $3 trillion in capital, committed, and such a large number you can't put your head around it. And then all of a sudden we're looking at all the actual logistics. Like it takes 2 years, a year and a half to build a data center. It takes 5 to 10 years to get the energy situation done. And you're going to have on-site, which is more expensive. So then you got to worry about profitability. So the question is, how long till we see real money returned to shareholders from all this investment? And then, of course, the logistics of it make that very uncertain. And then finally, like I said, everything is high, priced to perfection, and it's very easy for things to tip over. And we've lost momentum. And then, as you guys have highlighted and everyone's aware, the other risk kind of aspects in the market, like crypto, are signaling that something's kind of amiss.